Hi and welcome to the Market Alert for Wednesday, the 22nd of March 2023. So banks and a black gold bounce as bonds and bullion break down ahead of the Fed meeting, which is today. Yellen gives the all clear and everyone believes her. They don't. I certainly don't. US stocks gained amid further banking sector stability on the eve of the FOMC. Yeah, just words. SVB and Signature Bank were just the tip of the iceberg. That I agree with. If you thought inflation was bad last year, it's about to get a whole lot worse, absolutely, with all of this printing that's going on behind the scenes, economic death spiral, the Fed is trapped, financial collapse or hyperinflation. And just like that, the tight money era is over. And the world will realise that central banks are out of ammo with no choice but to let their currencies burn. And FOMC tonight, they are trapped. The debate around the March meeting is whether the Fed continues to lift rates to tackle above target inflation or whether it pauses to assess the financial market fallout. They will have to raise rates because if they don't, they threatened a half a basis point in the last few weeks prior to the banks failing, or the few banks failing. And if they don't, a bit like the ECB last week, they had to raise because there'll be no confidence in the system and they believe that the banking side of things were systemic and contagious. So yeah, it's going to be an interesting meeting tonight to see what they do. Let's just have a look at what is proposed. It's a quarter of 1% now. It was a half, but it's now down to a quarter. UK CPI out at 7 a.m. this morning as well. Previous 10.1, 9.9. That's going to be bullish for the market if it does come out as forecast there. That's for sure. That will help. But on Thursday, we've got a rate increase for the UK as well, which you can see there, which is another quarter of a basis point as well. So we'll see what happens. That's tomorrow. Blimey, where's this week going? And then Friday, we've got a lot of the flash news. Nothing major there unless Powell's going to come out or Yellen's going to come out. But otherwise, at the moment, it's all quiet on the banking collapse front. So the market's free to move to the upside. And also, if they go down with a quarter tonight, that's going to be bullish for the markets as well. Well, certainly initially. It's going to be interesting. It's at 7 p.m. this evening, so we'll just have to wait and see. Okay, let's move on, have a look at the markets from yesterday. Start off with the Dow and work our way through to the metals. And in the Dow yesterday, you can see the market trading up to the 78% retracement. From there back to there, the 200 MA is in the way, and overnight prices are just sitting between the two averages there and below the high of yesterday. This can be seen a lot more clearly in the 30-minute chart. There's your high for yesterday, and there's the price action in between the averages in the daily. Yesterday saw the market move high without pausing. The prices were up 100, 200, 300, 350 points. They then pulled back 250 points. Then made the way back 250 points, and then overnight the market sideways. I expect the high to be taken out. There's nothing on the horizon at the moment apart from the FOMC for the market to move higher during this morning's trading session. And maybe a bit of a move to the downside first, and they'll bring it back. Why would they want it to sell off after they've managed to get the central banks to actually create the liquidity and all the rest of it? So there's no reason to sell off, is there? Unless another bank comes out of the blue and says it's got no funds left. In the German DAX, also moving higher yesterday, up to 62.78. One drawn from there and one drawn from there, both back up to this point. So again, you see a bit of resistance there at 15.275. We looked at this yesterday. Market traded to it and to the 232. Needs to hold above the 50 EMA in order to move higher. But big move over the last couple of days, that's for sure. Let's just have a quick look, see how much this market's moved over the last 2 days. 809 points for the DAX. That's a massive move. So it needs to breathe a bit. But then if the news is good, why not continue moving the market to the upside. And what I mean by good is that the Fed only goes with the quarter and not half. 30-minute charts, it was up and away yesterday. Again, 100 points, 200 points, 300 points for the DAX, just under there for yesterday. Green all of the way in the 30-minute chart to there, putting on 200 points. Then a bit of a pause. But in the afternoon, then following the Dow to the upside, and yesterday's high is just above there. It's about 30 points away at the moment. In the 5-minute chart overnight, now you can see the market finding support at the 200 MA. There's your high, not that far away, looking already as if it wants to move to the upside. There's the action for yesterday. It was choppy for sure after we got the initial move. Then we pulled back, and then off we went. And the market, like I say, it was choppy as it made its way to the upside. It's not a convincing move in the 5-minute chart by any means, but over the period of the trading session, the market managing to move up very nicely, say 300 points. And at the moment, it needs to take out yesterday's high, which it's had a look at twice overnight actually, and not managed to get through, which is interesting. So the 7 a.m. CPI numbers will be interesting to see if it can encourage this to get through this level. And in the S&P, the market trading up through the 62.78, just above it there. We'll need to take this out in order to move higher. Bit of sideways action overnight, which you can see there in the 30-minute a bit more clearly. The high needs to be taken out as well. But during yesterday, again moving up strongly. Then we had news and existing home sales, etc. The market then moving to the upside. Like I say, the high needs to be taken out in order to continue to move to the upside. FTSE 100, another strong day, trading up to 50% of the retracement. Just stopping there. And in the 30-minute chart, again, you can see up 150 points from the futures market, and then certainly, 150 points, and then sideways overnight. Needs to take out the high. CPI numbers are obviously going to have an impact on the FTSE 100, and also tomorrow's Bank of England rate rise. And in the currencies, we've got GBP JPY, this moving to the upside yesterday. Let's just have a look, see where we are. Stopping at 62% retracement, but above the 50 EMA in the daily charts. In the 30-minute chart, we had a big move to the upside, over 100 points. We then gave back over 100 points as well, before going back nearly 100 points. Well, actually over 100 points to this high that's over here. On the overnight in the Asian market, price is above the close and not too far off the high as well. So everything's sort of heading back towards yesterday's highs, as can be seen there. In the pound, sideways to higher yesterday, and in the 30-minute chart, we're still above the 5-bar moving average there, still green. The 30-minute chart, a bit of weakness yesterday as the dollar found its strength. So we sold off, we found support, we then came back around 50% to the DP level. We'll look at the dollar in a minute, but the pound there sideways to higher, as we can see in the daily chart at the moment, staying above the 5-bar moving average. In the US dollar, we've got dollar index here. You can see yesterday, fairly quiet day, bit of bullishness overnight. 30-minute chart, let's have a look. You can see yesterday actually coming back down eventually, then back up midday, and then just sideways to higher overnight. So having a bit of impact there for the US dollar, based on the fact that everything had been announced, the 7-day or whatever it was that they've actually put in place. They keep creating these tools, you can't keep up with them. Whether it's QE, QT, I don't know. There are just so many that they created in the last few days. Give it a new label, and then we'll use that one to actually bail out the banks. Anyway, let's move on to the metals, which saw gold get hammered yesterday. So let's have a look at that. Yeah, we'll start off with gold. Today you can see absolutely monkey hammered back down below that 2,000 level. As I said yesterday, there was no way they were going to let it stay above 2,000 because that really does strike at the heart that the US has got a problem. So they did nothing but hammer it all the way down yesterday. Back down to, where did we come down to yesterday? 1940. Wow. So a good $60 hammering yesterday for the gold market. Silver actually fared better. This is unusual, isn't it? It's normally the other way around. You'd have expected to see silver being crushed, but yesterday holding quite well. And needs to get back above that 5-bar moving average. Depends what the Fed announced later. 30-minute chart, a bit of interesting price action around the LBMA open and also the economic news. And then picking up from the low and managing to come back overnight and just above the DP there as well. Needs to get back above yesterday's high, which means that if we have a look at it, the gold-silver ratio actually moving down because, as I say yesterday, silver not hammered as much as gold by a long shot. So we're dropping down to 86 there, coming off those highs of 91 that we saw recently. And finally, which I keep forgetting, but I can see it on the screen, the implied volatility. We've moved up recently and made that 2045. But as you'll see, because the Fed's come to the rescue of the banks once more, that this has now dropped back off down to those levels that we saw when there wasn't a banking crisis. So again, if the Fed raises by a quarter tonight, the market's going to love it. Then we'll see this move lower as well. So again, the correction is over for the time being, unless, and I'm sure the news headlines that we've looked at this morning are absolutely right, we haven't seen nothing yet. And this is exactly the same as 2007. We had a wobble in the markets, and then in the January, and then by August, the whole thing fell apart as it became more and more systemic and more came out. So I think we're heading back to that. They've only got so much that they can do. And as we saw yesterday, was it 18 trillion in deposits? Well, try bailing that out. I mean, they've got to raise the debt ceiling by 2 trillion just to keep the American government going. And defence spending. So, it says it all, doesn't it? Just a matter of time. It's like sitting there with your popcorn waiting for the main event, which we seem to be running up towards at the moment. Okay, that's it for this one. Let's see what the Fed does. Let's see what the CPI numbers are for the UK. And with that, thanks for watching. See you in the next one.